Good afternoon, everybody, and welcome to today's Open to Export webinar about what you need to know about Brexit in 2020. My name is William Barnes-Graham, and I am the Senior Content Editor at the Institute of Export and International Trade. Next, please. Next slide, please. Open to Export is a free online service helping small businesses get ready to sell overseas through our step-by-step articles and guides, regular webinars, our export action plan tool, and our quarterly competitions. You can find out about all of these on our website at www.opentoexport.com. Next, please. Open to Export is powered by the Institute of Export and International Trade, the UK's professional membership body for traders. Endorsed by the World Trade Organization and the International Chamber of Commerce as a small business champion, we offer a unique range of individual and business membership benefits, education and training catering for beginners through to master's degrees, and always exciting and prestigious program of events celebrating UK businesses' exporting achievements, and much more. Next, please. We will be running a live Q&A later in the session, and you can ask questions at any point using the question box on the control panel to the right-hand side of your screen. We've already been sent loads of questions ahead of today's webinar, so we cannot guarantee we will get through everything we receive. The general principle we will adopt is that we'll only ask questions that are relevant to the broader audience, so we won't be able to go into company specifics as such, but if you do have specific questions, we can refer you to our technical helpline afterwards. You can also download a PDF of the slides at any point via the handout drop-down on your control panel to the right-hand side, and you'll also be able to watch a recording of this webinar on opentoexport.com/webinars within a day of it finishing. Next, please. For now, though, it is my pleasure to welcome Kevin Shakespeare from the Institute of Export and International Trade to take the mic. Kevin delivers several of the Institute's Brexit preparedness courses around the UK and will be a familiar voice to many of our regular webinar listeners as well. Kevin, over to you.
Good afternoon, everybody. It's a pleasure to be presenting again today. Obviously, again on the subject of Brexit. As my colleague William just mentioned, I have presented previous webinars on Brexit and do listen to those or actually go back and listen, because obviously some of the impacts of Brexit, which we'll talk about today, could still come into play. Obviously the likelihood is that will be more on the 1st of January next year. But let's get in now to the core of today's webinar. Next slide, please. So today we will be talking about Brexit impacts, but also looking potentially at opportunities that can arise from trade with the rest of the world as well. And I want to emphasize that today's webinar is about as much about trading services as trading goods. And there clearly will be a lot of businesses that are both exporting goods, importing goods, but also involved in services as well. Next slide, please. So what we'll be looking at today is what the Withdrawal Agreement Bill means for UK businesses, what businesses should expect during the transition period from the 1st of February to the end of December this year, some potential key points which could arise as part of the trade negotiations between the UK and the European Union, and again, very, very important, as we've talked about before, what businesses should do to prepare for Brexit, but also in terms of a new trade agreement with the European Union, what that could look like, what that could encompass. And finally, we'll give an update on government grant funding for training in customs processes. Next slide, please. So in terms of timelines, which clearly there is a lot of information on the news and in the public domain on this aspect. Following the return with a majority for the Conservative Party government, the withdrawal bill has been approved by Parliament, and has been passed to the House of Lords. As has been reported, the House of Lords have proposed some amendments, which is now back to Parliament to consider, but very much heading towards potentially the withdrawal agreement being approved in ostensibly what we are today, with possibly some amendments. And the UK officially leaving the European Union from the 31st of January and entering a transition period. And we'll look at shortly what that transition period could look like and what that means. But the general principle or the working premise at this moment in time is that during the transition period, that trade remains as it is today. So what we know as zero tariffs on goods moving throughout the European Union, the UK being part of the customs union, and regulatory alignment, that will continue during this transition period from the 1st of February to the 31st of December. Clearly, if there are any changes to that, or there's any let's say regulatory diversion or realignment, we at the Institute will keep you up to date as developments arise. It is fair to say that the 1st of February that the UK can commence trade discussions with other countries. So clearly, the UK can enter into discussions about trade agreements, and countries such as the United States, for example, have been mentioned in that respect. So during the month of February, EU ministers will need to agree and required to sign off their negotiating mandate. So what are the key areas and the key lines that the EU will operate within? And clearly there's been some talk there about regulatory alignment, access to the single market, and other points. So from the 1st of March, formal negotiations between the UK and the European Union begin. And the UK has indicated, obviously there was an announcement at the last weekend, that negotiations will not include regulatory alignment. So effectively there will be divergence of regulatory position between the European Union and the UK. So from the 1st of March to whatever period, negotiations progress towards a tariffs and trade deal with the European Union. And what's been focused on a lot is this concept of a comprehensive free trade agreements. So a lot of focus within that has been on zero tariffs. So again, trying to continue the situation we have at the moment as the UK as part of the European Union, have zero tariffs, and that would be zero tariffs for goods moving from the UK to the European Union, but also goods moving from the European Union to the UK as well. So tariffs and trade, which would also include elements such as quotas, the likes of tariff rate quotas for certain products, for example, agricultural goods, will also be discussed. But if you look at wider elements of trade agreements per se, trade agreements are not just about tariffs, quotas. They're also about elements such as rules of origin, which we'll talk about, the economic nationality of the goods, in some cases intellectual property arrangements as well. So there are a number of things to be discussed, and one of the key areas, as well as tariffs and trade, will be mutual recognition. So to what extent will there be mutual recognition of standards? So whether that's in financial services, whether it's in data protection, because of the UK's announcement, the regulatory alignment will not include customs procedures. So the UK will leave, or has announced, let's say, that it will leave the customs union, and again we'll refer back to previous discussions on what that means in terms of the UK leaving the EU customs union. But customs procedures can still be discussed, packaging and labelling requirements, mutual recognition, as part of a comprehensive trade deal between the UK and the European Union. It is fair to say that once a trade deal is negotiated, then the EU member states will require, all EU member states and also the regions of EU member states will require to sign off a trade deal with the UK. A lot of people have referred to the fact that it normally takes 6 months to have that sign-off process. To be fair, that was discussed in relation to Canada and some of the issues with some EU regions, putting barriers in place to the signing of the EU trade agreement with Canada. Clearly 6 months has been the figure mentioned, but it could be shorter. We just don't know at this period in time. But it is fair to say that EU member states need to sign off any trade deal with the United Kingdom, and that will require some considerations. So 31st of December, again, the government has been fairly clear that a transition period ends on the 31st December with no extension, and the UK effectively is completely outside of the European Union. There has been some talk about the possibility of interim deals or interim arrangements pending more comprehensive deals, and that clearly could be an alternative that could arise as well. Next slide, please. So in terms of the October 2019 withdrawal agreement, and there were some changes to the negotiated withdrawal agreement, obviously Northern Ireland, but some other technical changes between the original withdrawal agreement and the more recent withdrawal agreement in October 2019. So the UK will no longer be part of a single customs territory or union within the EU. It will no longer be legally bound to continue with the level playing field commitments. And this has been an area that's received a lot of commentary in recent days and weeks, is what do we mean by level playing field commitments? We will look further at that, but this element of the European Union indicating potentially that they have a concern that if there is different playing fields, different regulatory alignment, that the UK could gain competitive advantage over the European Union. So we will hear a lot more about this level playing field commitment and how that is subject to negotiation, because clearly the United Kingdom will want to support its exporters, its importers, and companies that are part of supply chains to be competitive in the EU and in world markets as well. Now, clearly, one of the big changes was the situation with regard to Northern Ireland, and we will hear a lot more of that during the transition period. And for those businesses that sell, whether it's goods, services to Northern Ireland or Southern Ireland, there certainly further announcements will become key. The headline is that the Northern Ireland will still be in the UK customs territory and VAT area. However, they will align with the EU rules in these areas. So in other words, the Northern Ireland will remain mostly aligned to the EU regulations for goods. And then 4 years after the end of a transition period, the Northern Ireland institutions will vote on whether they wish to continue these arrangements. Now, in practice, it has to be worked out what the situation will look like for Northern Ireland and obviously Southern Ireland. So Northern Ireland will apply many of the EU customs rules, and there's been a lot of talk of effectively being a customs and regulatory border in the Irish Sea, as they refer to that. So does that mean that there will be border checks on goods moving from Great Britain to Northern Ireland? And if so, where will those border checks be? Where will the customs declarations be? Could they be at the UK ports in the likes of Scotland, Wales, and England, as goods depart from Great Britain to Northern Ireland, or could they be at the Northern Ireland ports? Or will some goods, clearly as it's all part of the United Kingdom, not be subject to border controls and customs requirements? That remains to be seen. There has been sort of talk of some at-risk goods, so at-risk possibly defined as goods that are moving from Northern Ireland to Southern Ireland. Clearly agricultural, medical goods being examples of that, but clearly there are numerous examples of goods moving between the north and south of the island of Ireland. So a lot of considerations there, and what we obviously do suggest to businesses is that you're clear at this stage who is the end purchaser. So where are your goods going? So if your goods are going to Northern Ireland, are they potentially being onward sold to Southern Ireland? Where does that onward sale? So are they part of a production process in Northern Ireland before for raw materials before they move to the south, or are they moving through Northern Ireland through the ports of likes of of Belfast, for example, onto the south. So do look at that in terms of your business, because clearly there's lots of talks about tariff rebates that could apply, providing evidence that the goods are actually not moving from the north to the south. But at the moment, businesses should just consider, are you clear if your goods are going to Northern Ireland, whether they're moving on to the south or whether they're staying in the north? Next slide, please. Right, so other points to note with regard to the withdrawal agreement. Again, some of these have received a fair bit of visibility in recent weeks. So it is fair to say that we, like others, are expecting further government announcements from gov.uk as we progress through January and the withdrawal agreement progresses as well. So there could be further government notices, and those government notices could relate to what happens or clarifying what the situation is during the transition period. So in other words, business as usual in a majority of cases. And as we head towards obviously December, there'll be more notices, and if there isn't a trade deal, potentially more similar to what we saw in terms of the no deal notices in March and October last year. But at this stage, we can't speculate too much about what these are going to look like. The basic principle being that during the transition period, a lot stays the same as it is currently, and if there are any changes, obviously you will be advised of them as soon as possible. But the principle is there in terms of what happens during the transition period. So citizens' rights, free movement continues until the end of the transition period, the end of December. So EU citizens living in their host state before the end of a transition can have permanent rights of residence under the withdrawal agreement. As noted, however, the EU citizens have until the 31st of December to apply to the EU settlement scheme. For settled status, if lived and worked in the UK over 5 years, and under 5 years for pre-settled status. Now, since the launch of the EU settlement scheme in late March 2019, there have been 2.6 million applications to the EU settlement scheme, and 2.2 million applications have been granted. I think the statistics are settled status 59% of the 2.2 million, and pre-settled 41%. So there is a lot. So businesses again should continue to encourage EU nationals to apply to the EU settlement scheme. And it is important that day to the 31st of December, and certainly we would encourage businesses and EU nationals not to wait until November, December to make that application as soon as possible. 2.2 million EU nationals have been granted settlement status. Clearly, under the rules of the withdrawal agreement, the transition period will run until the end of December 2020, but there is a possibility of an extension of up to 2 years, notwithstanding obviously the political commentary suggesting that that extension will not be taken up. Now, a key element also for businesses is that EU law will continue to apply during the transition period. So any new EU laws introduced during the transition period will apply to the UK. And that's an important principle. So again, the principle is certainly that either during the transition period, the EU law will be taken into UK law, and clearly thereafter there is propensity for the UK to modify that law. And clearly there are a huge number of EU laws in areas such as employment, health and safety, product compliance, etc. The level playing field provision, so back to that term level playing field. So examples of level playing field are areas such as taxation, environmental protection, labour standards, state aid and competition. And again, these are all very interesting areas, and areas as we know that the European Union will want to try and avoid the UK getting competitive advantage. And certainly this level playing field is, will it grant the UK what it ultimately wants, which is a comprehensive free trade agreement. So clearly the linkage between regulatory alignment, level playing field and tariffs and comprehensive free trade agreement will be key parts of the discussions which will take place. Intellectual property, generally that's been relatively good news. As before, the UK government has indicated in the withdrawal agreement it will grant owners of trademarks, community designs, plant variety rights that are registered or granted before the end of transition period. There will be a new UK equivalent right with the intellectual property office in the UK. So that probably hasn't changed in that respect. If any of you, any businesses today have products which are of geographical protected status, then it is then worth letting us know, because there were a few discussions as we ran up to October in terms of GPI, geographical protected indicators. So examples of geographical protected indicators, for example, would be the likes of Scotch whisky, some of the cheeses, some of the food brands, seafood, salmon. Not just food products and beverage products, but those are the prime examples. But if you do have products that have geographical protected indicator status, by all means let us know, and we can have separate discussions in that respect. Next slide, please. So the transition periods, some of the areas, to some extent by way of summary, the key discussion points during the UK-EU trade negotiations. So the negotiations on tariff-free access from the UK to the EU, and obviously it works both ways, versus the alignment with regulatory standards. The rules of origin. So in all free trade agreements around the world, there is rules of origin established within the trade agreement. So rules of origin, the economic nationality of the goods. At a global level and the World Trade Organization rules, it's normally around 60%. It can be lower. If that's agreed by all parties. So to access trade agreements, if there is a zero tariff trade agreement, UK exporters are likely to have to demonstrate a certain percentage of UK origin, whether that's 50, 60%, to, if you like, benefit from the rules around preferential tariffs or zero tariffs. The access to sell services in EU member states. So clearly when the UK leaves the European Union, free movement of services ends. And to some extent it's down to each EU member state to determine the extent to which UK businesses can sell services within the EU, unless there is a part of a trade agreement, there is a blanket agreement to sell, whereby the UK can continue to sell services. We will speak about services a bit more, but again, if you are a company that provides services, there were government notices in October last year in terms of the country and the type of product you're selling to. But there are some key issues in terms of service. So what type of service are you providing? Does it require professional qualifications? Is there recognition of that service in the country? What is the need for that service? We'll look a little bit more about services, but it's a key area there, and it will be a key part of trade negotiations. It's not just about tariffs, it's the ability to sell services. There is a mutual recognition element I referred to, so data flows, data protection, financial services regulations, and there are other regulations that need to be agreed as well. Clearly, the extent to which the UK is either allowed or negotiated divergence from EU rules becomes key. Citizens' rights are still a discussion topic, the ability to travel and mutual rights of stay. So elements in terms of travel, as we ran up to October last year, the EU had offered that UK business travellers could stay 90 days in the 26 Schengen countries without requiring a visa. Clearly that has to be negotiated and mutually agreed between all parties. So things like citizens' rights, travels, mutual rights of stay are to some extent still up for negotiation, notwithstanding that there could be a review of previous discussions as a base negotiating position for both parties. Clearly, there are some elements not clearly defined in the withdrawal agreement, like fisheries, which are subject to discussion and negotiation as well. And those are clearly going to be key negotiation areas for certain sectors. Next slide, please. Okay, so what businesses should expect during the transition period? As I said, the working assumption is that everything remains the same by and large. Clearly, there could be changes in terms of third countries and the recognition of the UK, and I'll come back to that point in a minute. But all this reinforces is that UK businesses must continue to work, to speak, to communicate to customers, suppliers, stakeholders. And as I indicated before, you can create, if you like, an export and import supply chain spreadsheet to see what the key areas are for your business in terms of country of trade, what potential impacts are in terms of tariffs if you have goods, what the impacts are on the sale of services if it's a service. And you should apply that to the rest of the world, not just the European Union. You should also apply it to the United Kingdom. Because if, as I indicated previously, if you're selling goods on services to United Kingdom, if they are effectively part of a supply chain going overseas, there will be a potential impact there. The other thing why communication is so important is that the awareness of Brexit, clearly has been a lot of notices and information in the United Kingdom, is perhaps not as strong in the European Union. So there is propensity and a risk that some EU businesses may think on the 1st of February that the UK has fully left the European Union, without, if you like, the awareness of a transition period. So it's important for UK businesses to reassure to businesses that are in the EU and the rest of the world as well that there is a transition period. We can't control what the news is in Europe and the rest of the world. But what businesses can control is the communications and advising their customers, suppliers and stakeholders as well in Europe and the rest of the world. What we don't want is misunderstandings taking place because everybody thinks the UK has formally left the European Union and there is no transition period. So, continue businesses, discuss the impact if there were tariffs to apply after the 31st of December. So businesses would have already looked at that in the run up to October, but clearly as we enter December or October, November, December 2020, businesses should continue to look at those impacts. As we talked about previously with tariffs, the highest tariff goods tend to be agricultural products and especially products of animal origin, where the tariffs can be very high, whereas some products such as medical goods, for example, can be zero tariff on entering the European Union. So again, do become familiar with what the tariffs are for your goods so you know what the potential scenarios are if there is no trade deal between the UK and the European Union or it takes place after the 31st of December. Discuss ongoing terms of trade. So we've talked a lot about Incoterms. What has happened since October 2019 is there is a new set of Incoterms 2020. So businesses need to be aware of the impact of those new Incoterms, but it doesn't take away from the fact that businesses need to understand their responsibilities in the trade journey. So who is responsible for delivering the goods and where does delivery of the goods pass? Is it, for example, at the exporter's premises in the UK? Is it at the port or on the vessel in the departure port of the UK, or does it take place overseas in Europe? These are all important aspects and they are not likely to go away. So we have a period now in which businesses can continue discussions or start discussions in terms of the Incoterms. So that becomes very, very important. Do look back to previous webinars where we talked about Incoterms such as ex-works, DDP, delivered duty paid, DAP, delivered at place. They all have big impacts in terms of Brexit. So this issue will not go away and businesses should familiarise themselves there. And obviously take account the impact of customs declarations. That issue is probably not going away. Who is responsible for the customs declaration? What are the responsibilities on declarations in providing information, having the correct commodity code, having the correct documentation, valuing the goods correctly? Consider the impacts of any changes in regulatory alignment. Again, we've referred a lot previously to the European Union CE mark. We'll talk about that in a few more slides again. But regulatory alignment differs depending on the type of product that you are selling. We will talk about that more. Continue to familiarize yourself and continue to await updates on what regulatory alignment, what the requirements are for moving the goods, on the basic premise that when the UK leaves the European Union after the end of a transition period, it will be a third country, and it will be treated in the same way as other third countries that are not part of the European Union. But ultimately, it's about relationships with customers, suppliers, and stakeholders. And through discussion, opportunities for business could arise. As I have said previously, customer relationships, good relationships hopefully transcend Brexit, but it's very important to have the communications. Now, I just wanted to mention that if there are companies clearly that are part of corporate groups, so whether there is a parent company in Europe, or whether they are sister companies in Europe, there are a number of things at a group level that a company should consider. So, for example, binding corporate rules for GDPR, where data flows between group companies can be subject to binding corporate rules. Also, businesses have to be very aware, not just where it's intercompany, where goods are declared for customs purposes. Now, currently, when goods clearly move between the UK and the European Union, they do not require a customs declaration. So the declared value for customs has been less of an issue. But it's fair to say clearly that the role of the commercial invoice and customs valuation will become potentially a big issue. Clearly, a lot of companies, or majority companies, will declare the value of the goods correctly for customs purposes. But if there is any under declaration, for example, for purposes of transfer pricing between group companies, that could become an issue as the valuation of the goods becomes more apparent in the post-Brexit environment. And also there's been some commentary around tax treatment. So effectively, when the UK leaves the European Union, it will need to have tax treaties with all the EU member states. So in terms of moving money around intercompany, companies should take tax advice in terms of what that could look like to avoid implications potentially of double taxation. Next slide, please. However, 2020, like anything in your business or anything in international trade, it's not just about Brexit. A lot is happening this year. It's obviously an exciting time for international trade, but there's a lot of things for businesses to consider. But as always, businesses must continue to focus on what is most important for them. Brexit may be the most important aspect, but there is more. I've talked about Incoterms 2020 and the changes in the international commercial terms. There is talk, obviously, of the introduction of a new customs declaration service replacing the current service chief. So there will be new fields that companies and their forwarders and agents will have to get used of in terms of the requirements for customs declarations. That is a key area also that businesses must consider. There could be opportunities arising from new UK trade agreements. Obviously, that remains to be seen. There is speculation on trade agreements that the UK may negotiate with certain countries, but clearly they could be opportunities. Certainly for some sectors, clearly, for example, the United States, engineering, manufacturing, for example, there could be benefits of a trade agreement. Equally, the UK market gets opened up as well as part of a trade agreement. There are opportunities always arising from the World Trade Organization trade facilitation agreement. So customs clearance documentation is becoming more electronic, and businesses need to be aware of the move to electronic documentation, which will take place in the coming years. There could be opportunities from e-commerce and technology and enhancements in general, 3D printing and various other examples that businesses might want to actually use. It is fair to say that businesses need to be aware this is not just a Brexit theme of changes in the low value consignment relief, and I'll talk about that shortly. There is support from UK Export Finance for UK exporters. So UK exporters should seek support working in tandem with their banks to see how they can be competitive in markets, whether that's through cash flow, whether that's being competitive on payment terms, but obviously making sure you get paid correctly. So in summary, 2020 is a year of change, but it's also a year of opportunity. And companies, obviously, the more companies professionalize, and we know at the Institute there's a lot of excellent companies out there that have taken a lot of preparation. And clearly, Institute, we're here to try and support you, whether that's through professional qualifications, training, and membership services. And we will expect more announcements, and there has been a number of announcements the last few days warming businesses up to customs special procedures. So that could include the likes of inward processing, warehousing, transit. 2020 could be a big year for advocacy of customs special procedures, which maximize customs processes, customs regimes for the benefits of business. So look out for that, ultimately leading towards authorized economic operator, AEO status, which I have talked about previously in terms of best practice from a customs procedures. For some of you more than others will be familiar with authorized economic operator, AEO. What we have seen in the latter months of 2020 is a surge in the number of UK businesses applying for and being approved for AEO status. So businesses are seeing this as an opportunity to professionalize and take advantage of the benefits of AEO safety and security and customs simplification. Again, we can provide further information in that respect. Next slide, please. So just a reminder of some of the key Brexit issues, and I'll stress these are just a sample. Do listen back to previous webinars and we will keep you updated with these issues as they unfold or as they are updated. Next slide, please. So as we've said, identify tariffs that may apply. And this is trade for the European Union, but trade with third countries. Discuss changes to VAT arrangements. So as we've talked about previously, the concept is that import VAT will be payable upon import of goods into the European Union. So those companies that are familiar for trading in goods, for zero rating your exports to countries outside the EU, that will now apply for sales to the European Union. But import VAT will be payable by the overseas buyer unless they're able to defer payment of that VAT through the likes of duty deferment accounts and bank guarantees. So VAT arrangements must discuss. Incoterms, agree, discuss, be clear. Insurance of goods in transit, be clear that the goods are insured during the trade journey. Note that forwarders and carriers have limited liability in terms of any issues, damage, loss of the goods during transit. That liability is enshrined in international global conventions. Communication. Ensure you are compliant with EU and UK regulations. So as regulations diverge, there'll be more separate EU and UK regulations, and businesses need to be aware. For some businesses, you will need to note the impact of the abolition of low value consignment threshold, currently £15. Import VAT will be payable. The EU is also due to abolish the relief in 2021. The threshold is currently €22. So for some businesses in the likes of the e-commerce sector, for example, the abolition of low value consignment relief is definitely something to bear in mind. And communicate with your stakeholders, clearly freight forwarders, agents, banks, and as I've indicated previously, try and avoid misunderstandings. Next slide, please. Okay, so just a quick summary of one or two, but it's impossible to cover everything today. I just wanted to refer again to the CE mark, so products which have health and safety requirements. There are examples of products here, such as medical devices toys, machinery, electrical products as well. So as we've indicated previously, there are issues if you are an exporting business, you're exporting to the EU and your products require to retain the CE mark. You will require, if you're using a UK notifying body, for them to notify through their EU legal entity. Just an example. And there will be a new UK CA mark, which will have obviously be similar to the CE mark, but will be different. So this is just an example where businesses need to be aware that they will have regulations in the EU to meet, and they will have regulations in the United Kingdom to meet. Same, for example, for REACH for chemicals. There are others as well. So a number of things to consider there. And if your suppliers also need to consider UK regulatory requirements, such as the UK CA mark. Next slide, please. So meeting EU regulatory standards, again, just a summary here. We could go on, and I've just picked out some sectors here. There are many more. Food labeling. So for some companies, food labeling is an issue, and the issue around the importer of record. So food that's exported from a third country to the European Union must have the address of the importer in the European Union. Clearly, the EU supermarket chains generally refuse to have their name and address on it because they're effectively then giving their accreditation to the whole supply chain. So do consider that the food labelling standards, and again, we're happy to provide further information on that because this is a big issue around food labelling. And also, you've got the reverse: food products come into the United Kingdom from suppliers in the EU. Products of animal origin is a key issue that we have flagged up. The need for products of animal origin to be approved at border inspection posts in the European Union, the requirement for export health certificates and catch certificates for the likes of seafood and shellfish as well. Medical devices regulation. So medical devices are clearly very heavily regulated. And if you are an organization that has centrally authorized products and medical devices, making sure that you are regulated again in both the European Union and the UK. You should have received a letter from the medical authorities in both countries. REACH for chemicals and the need to register in both, and to have, in terms of REACH, the authorized representative status in the European Union. Export licenses. So export general licenses is a big issue, and the Institute, recognizing the importance of issue has a webinar coming up on export licenses as well. At this stage, just to mention, obviously, that you have goods which have a dual use, that have a military and a civilian purpose, or civilian and a military purpose. And that increasingly includes companies in the service sector. So companies providing software that goes into certain types of machinery, advanced engineering, and also technology companies and consultancy companies providing these types of services. This becomes a key issue. Currently, when we're selling as part of the European Union, you do not need licenses for dual-use goods. But when the UK leaves, that will be required, and also required for goods moving from the European Union to the UK, ensuring the correct valuation of the goods. So a number of things to consider there, all around processes and regulation. Next slide, please. So we're coming towards the end now. I've talked previously about having a weekly planner. That doesn't change. We're not necessarily looking at weekly planners here. We were in November and December, we would be. But businesses still should consider monthly or quarterly planners. The issues are still here. GDPR. Obviously, things will move on during the next year. We're looking at trade and services. So we're looking, for example, at data flows, the type of service your business is selling into. And at this stage, I want to refer to the fallback position of the WTO trade-in services, because that's what the UK will fall back to unless trade-in services are agreed as part of a comprehensive trade agreement between the UK and the EU. So the ability to supply services cross-border, mode 1, to consume services in another country, to establish commercial entities, and the ability of individuals. These all become key. Because there's been good trade between the UK and the European Union on services, there will need to be individual agreements with the different EU member states, unless it is part of a wider trade agreement. So again, we will keep everyone updated on how negotiations and if you like, the public notices on services as well as goods. Communication strategy to employees. So clearly for services, but also goods, EU nationals are fundamental to UK businesses, and UK nationals are working in the EU. The intellectual property position, trademark, community designs, access to EU procurement schemes, digital data as well, so the likes of digital trade and services. Next slide, please. And finally, I think as now we look at trading goods, make sure you obviously continue to speak. Look at transitional simplified procedures. Further announcements will be made on transitional simplified procedures. Postponed VAT accounting, what we refer to as easements, to ease the importing impacts for UK supply chain and importers. Look out for further announcements. We will keep you updated as well. Think about your product. Is it a chemical or have chemical byproducts in? Is it export licensing? Does it require the CE mark? Products of animal origin. All those remain points to consider for your businesses. So thank you very much for continuing to listen to me, and obviously happy to take questions. Thank you.
Thank you, Kevin, so much for that overview of some of the things businesses need to be starting to do now to ensure they are starting to get ready for Brexit. Obviously, things will change throughout the year, and we will be running further webinars as and when we find out more about the details of the where the negotiations will lead us. And also, Kevin did mention a fair few links to previous webinars, which we'll send you links to in the aftermath to this webinar. We're now going to answer some of your questions. Please remember that you can ask questions at any point using the question box on the control panel to the right-hand side of your screen. But as we noted at the start of the webinar, we won't be able to go through every single question we received today because we've been sent so many. We will do our best though, and we will refer you to the Institute's technical helpline if you still have burning questions after the session. This helpline is free for IUE members, and also just a warning that we won't go into company specifics as such. We'll try to keep things broadly general. Kevin, just a few quick fire clarifications to get us started. So the first one is from Madeline, who asks, with the new tax treaties, will the UK be negotiating those treaties with each individual customs authority or the EU as a whole?
Again, it's a good question, and it probably comes back to what's negotiated between the EU and the UK. The principle of it is that for some EU processes, negotiations take place at an individual country level and not at an EU-wide level. So things like citizens' rights to some extent is very much down to each individual EU country. So the working assumption or working presumption is that tax treaties will need to be negotiated with each separate EU country. It is fair to say equally that the EU has to agree its negotiating position, and it will evolve as to what is in scope in that negotiation, to what extent the EU can speak on behalf of each member state, or to what extent the UK is going to have to agree with each member state of the European Union. So we have to wait and see, but the working presumption is that tax treaties will need to be agreed with each EU member state as we stand today.
Great, thank you, Kevin. Another quick fire one from Sarah is, do the Irish have to apply for the settled status?
So that one is that no. There's an agreement, I think it goes back to 1948 or possibly before, that there is free movement between both ways between the United Kingdom and Ireland. So if you're Irish, you do not need to apply to the EU settlement scheme. You have automatic right to live and work in the United Kingdom, and vice versa as well.
Great, thank you, Kevin. A couple of questions we've had come in around origin, which I know you briefly touched on. So just a clarification, One from Gokhan was, during the transition period, will there be any changes in preferential treatment calculations? Can we still consider UK origin goods as of EU origin?
It's a really good question, and if we go back to September, October, this was raised as a potential issue, obviously then in relation to the end of October, not the end of January. And there was talk of, if you like, well, obviously a lot of you will be familiar with the EUR1, that the EUR1 would cease to exist after the 31st of October, or the end of October, if the UK left with no deal. I guess you could argue that further clarification is required on that. And chambers of commerce obviously will provide information as they are advised in that respect. There is the element of what should happen, that UK origin will continue to be part of EU origin, and the EU have written to all the countries it had trade agreements with preferential trade that those countries should honour and continue the UK as part of those trade agreements. You could argue it's down to the individual countries as to how they interpret that. Clearly, again, the UK has been signing continuity agreements with the third countries, and currently I believe the UK has signed 20 continuity rollover agreements with 50 countries. Some of those countries, such as South Korea, have agreed to continue UK origin in the preferential agreement for 3 years. It is possibly down to each individual country and what stance they take. The principle the EU and the UK again is working on, that UK origin will be part of it. It is sometimes difficult to legislate what customs authorities in certain countries will adopt, notwithstanding the official line. Thank you.
Great, thank you, Kevin. We've had a few questions in around customs declarations. Paula, for example, asks, will we need to be completing customs declarations during the transition period? Could you say a little bit more just about customs declarations in general, and maybe if that's an opportunity to talk a bit about the grants scheme a bit more as well? We had a question from someone asking if you need to be UK based. Sorry, if they've only got a branch from the UK but they're overseas as a company, can they apply? So just a bit about the application for grants as well, please.
So a couple of elements there. During the transition period for sales and purchases, or arrivals and dispatches as they're referred to from the European Union, customs declarations will not be required. The UK still remains part of the customs union during the transition period. There is obviously propensity for that to stop, but that is within the withdrawal agreement itself. It's at the end of the transition period that customs declarations for movements to and from the European Union come into play. With regard to the customs declarations, obviously that depends, as I've indicated, on the Incoterms used as to responsibility of the if we look at a sales transaction, the UK exporter and the overseas buyer. So customs declarations become key, and customs declarations are not just to say, well, my forwarder, for example, or my agent will make the customs declaration on my behalf. You are responsible as the trader, the exporter or the importer, providing the information to the forwarder or agent. You can obviously make the declaration yourself clearly as well and purchase the software. But companies are responsible, and they have to understand their responsibilities in the eyes of customs for that declaration, even a forwarder or an agent. And that doesn't matter if you're forwarding a lot of physical goods, you're moving goods by e-commerce of low value, say for example by air freight. You are still responsible for that customs declaration. So training and awareness becomes key, and the customs declaration has a lot of information required in it. I've talked about the commodity code, for example, whether the goods are in free circulation, whether they're subject to warehouse, the type of goods, the valuation of the goods, it goes on. So understanding what goes into a customs declaration is fundamental. It's not something that clearly companies trading with the EU only have had to face. It's only trade with the rest of the world. That will change, so understanding of customs. So the customs grant scheme in place until the 31st of January, that's the current working position, subject to any further announcements, is that businesses can still apply and receive funding, and I think it is actually on the next slide we've got here, up to £2,250 for customs grants there, which is the cost of an employee, and that can apply for qualifications as well. So businesses should look to make an application before the 31st of January to the customs grant scheme and look what's available. If we could have a next slide, please, I can just quickly refer you to a web link there, which has information on the actual customs grants and obviously the web link as well. So businesses should take the opportunity. Many businesses have already to train their staff on customs grants and take part of customs qualifications. So do look at that, and if you haven't applied, do consider applying before the 31st of January in respect. You need to register with PwC, but you've got the link there in terms of customs. I cannot stress enough how important customs procedures, customs grants, customs declarations are, and it's a huge area in terms of businesses becoming aware of what their responsibilities are. And it can also help you professionalize and take it forward in your trade with the rest of the world as well.
Great, thank you, Kevin. I probably should add something there about the fact that the grants can be used towards all of the Institute of Export's training courses, and also a lot of training courses provided online through the UK Customs Academy, which we are working on as well. So yeah, do have a look at the site. There's a lot of opportunities there to get basically funded training on some very important skills going forwards. I've had a few questions in about licenses and controls. So one from Joseph, for example, asks, what will the licensing requirements be between the UK and EU member states, both directions, between the 31st of January and 31st of December? And is there any outlook on what's going to be the case afterwards?
Okay, thank you. So during the transition period, the current arrangements will apply. So if you are selling goods to the European Union, and if it's a dual use good, you do not require a license. It is fair to say, however, equally, whether we're inside or outside the European Union, the businesses have to be clear of the end use and the end user of that product. Even if you are selling it to the European Union, is the European Union the final sale? So you do still have obligations in terms of end use and end user. If you are clearly, when the UK leaves the European Union at the end of a transition or after the end of a transition period, open general export licenses, OGLs, will be required for dual use goods. And as I've indicated, there is a list of controlled goods, a controlled goods list, which is available from the Export Control Joint Unit site. It is a big issue, export licenses, and in the technological world in which we live in, it's not just about the physical goods and dual use goods such as fertilizer, radar equipment, broadcasting equipment. It is also about component parts as well, which does include, as I've indicated, software and technology and also consultancy services. So to put it as an example, if you're taping your laptop abroad and that has information in terms of formulas or software requirements for controlled goods, technically you may require a license, and you certainly should be in contact with the Export Control Joint Unit. It is a big issue, and at the end of a transition period, to just confirm, open general export licenses will be required for sales what will become exports to the European Union of dual use goods.
Great, thank you, Kevin. We've had a few questions in about VAT as well, which I know you mentioned briefly, but one question was about VATMOS and what the rules will be during the transition, and I just wondered if you could say a bit more about VAT.
We talked about VAT in terms of trading goods. I just want to quickly cover trading services as well. So currently with trading services to European Union, it's all based around the place of supply rule. And you may have heard me, some of you may have heard me say this already. So effectively, if you are a UK company providing a service and the purchaser is a VAT registered business in Spain, for example, the place of supply is Spain. So no VAT is accounted for by the UK seller of the services, and the VAT is accounted for by the purchaser in Spain. In the event of the UK leaving, whether that's a no-deal Brexit or at the end of transition period, the working assumption was last October that there are no changes to that place of supply rule. With regard to the MOS system, the mini one-stop shop, clearly, again, this could be an area where notices are updated as we move towards the end of December. But again, if we go back to October last year, September, it would have been necessary for UK businesses to register for the EU VAT MOS non-union scheme. So if you're not in an EU member state, you can still use MOS, but you have to use the non-union scheme. And at the time, you would have had to register by the 10th day of the month following the sale. So it is possible to access the MOS scheme. You don't as a part of a non-EU member state, but it would be the MOS non-union scheme. Clearly, that was a position last October. It could be subject to negotiations between the UK and the EU, and we await further announcements as to whether that would be the position in the 1st of January next year.
Great, thank you, Kevin. We've had, I said I wasn't going to go into sectors as such, but we've had multiple questions come in from food and drink companies. I'll do a more general one. So John's asked, food labelling is huge and still confusing many companies who trying to find an EU importer for the first time. Could you provide a bit more information just about food labelling and perhaps maybe signpost a bit for food and drink companies as to where they can find more information about all of this?
Yeah, it's a good question, and it's certainly something when the announcements were made on food labelling that it was seen as a big issue, especially as I've indicated that a lot of the UK retailers, sorry, the EU retailers and supermarket chains refused to have their address as the importer of record. So that's left some businesses having to consider, well, who do we use? Do we use an agent? Do we use a warehouse? Do we have access to a warehouse facility? Can we work with a third party such as a forwarder and effectively their warehousing facility? So there are some options there, but generally those options in theory cost money. Clearly, one option potentially is to obviously set up a legal entity in Europe, so the importer of record becomes your European entity. But that's a lot to consider for companies. That's a lot easier said than done. So it's still an issue. Clearly, there will be agents in Europe that will be more than happy to provide that service at a cost for you. And I suspect as we go through the transition period, we will see more agents. But if agents are going to be used, then credible agents which are vetted with due diligence become important. So linking, we will keep up to date. Your trade association will also keep up to date. It is seen that food labelling is a big issue. I guess during the transition period, there is time for new entities to enter the market, but it doesn't take away the fact that this issue still exists. Notwithstanding, there is time to try and undertake due diligence and look at potential solutions as well.
Thank you, Kevin. We're running slightly over, so I'm going to do just two more questions. The first one is from Sarah, who's asked, how will ISO and British standards be affected?
Okay, so ISO obviously remains as the same, and British standards are very well accepted. Like anything, you can't legislate for what an organisation overseas might consider and what they're hearing, which is why communication becomes so important. So obviously there is a need to communicate and recognise that British standards are still recognised. ISO obviously is still very, very much clearly recognised as well. So it is important to engage and discuss and reassure the recognition of British standards are to a very high standard, and they are part of the international standards as well.
Thank you. And our last question is just about business travel. So any kind of tips on what's going to be happening in terms of continued business travel after Brexit?
Again, obviously, there was the announcements in the likes of September, October around the 90 days visa-free travel, and obviously very much talking from business travel rather than a personal travel perspective in the 26 Schengen countries. So announcements are awaited. Clearly, business travel will be subject to reciprocal mutual agreements between the UK and the EU. So that is an important factor. It is an area where there will be announcements, and whilst, if you like, the position last September or October is a base position or an actual position, that remains to be seen and subject to further negotiation. If you're driving overseas, you may require an international driving permit from the 1st of January next year. However, again, there's interpretation of rules during the transition period by officials overseas as well. But there is a good government website which provides information on which countries require international driving permits. So it is business travel, passports, there's government advice on passports as well, all become very important areas. So look at the gov.uk sites on passports, on business travel, and on driving permits. They are all factors to consider, notwithstanding that during the transition period it should be business as usual, which is why we and others are expecting government notices around what the transition period will look like, confirming the business as usual angles and any areas which fall out of business as usual. Thank you.
Thank you, Kevin, and yeah, thank you as well. I think it's probably time for us to wrap up. So yeah, thank you for the presentations and the answers. There's loads of questions we didn't quite get to today, including things on the Northern Ireland border, approved exporter status, all sorts, kind of lots of different non-EU countries and how trade will go on there, the ECJ. So we'll try and factor all of this into our planning for webinars later on in the year. And a reminder that you can then download the slides from today's webinar using the handout drop down of the control panel to the right hand side. And yeah, if we didn't get to your questions, members of the Institute do get access to our technical helpline, so do contact us if you have anything unresolved and you're a member of ours. Anyway, can you move on a couple of slides, please, to the next webinar slide? Thank you. Right, so our next webinar, we will be looking at what you need to know about export controls and licenses, and this will also include updates on the potential impact of Brexit again in this space. We'll also feature some information about the Institute's export control profession, which was set up last year. This webinar is taking place on February 19th, and you can find sign-up details to that at opentoexport.com/webinars. Next, please. The Institute of Export and International Trade will be running several Brexit-related events and training courses throughout 2020. We are running training courses around the UK which can still be fully funded by the government grants, as Kevin mentioned. And today's session has hopefully given you a flavour of what these courses include. But if you really do want hands-on support from an export expert about what your business specifically needs to be doing, we do recommend signing up to one of our training courses. So do have a look at the website for more information. And our World Trade Summit program will be kicking off in Manchester on February 12th. The summits are a great opportunity to hear from trade experts on a wide variety of topics, including Brexit, the WTO, trade wars, and the technologies which will shape the future of trade too. It also gives you a great opportunity to network with fellow exporters and global traders in your region. You can find details about all of our training courses and events at export.org.uk. Next, please. And as we enter into a new era of trade in the UK, it's really important that we support each other and share information and wisdom around best practice in global trade and the challenges ahead. Membership with the Institute gives you a support network and a wealth of information to ensure that you have everything you need to meet the challenges of global trade. Benefits include access to our technical helpline for questions such as the ones we've been looking through today, industry recognition of your exporting credentials, a wealth of online information and daily bulletins about all the key trade issues, as well as networking opportunities and events, and so much more. To find out more about membership with the Institute, please do look at the site export.org.uk/membership, and our membership services team will always be happy to answer any questions you may have. That's all from us today. We hope you found today's webinar useful, and please do take our exit survey to let us know what you thought. And feel free to get in touch about any queries you have around global trade. Till next time though, goodbye.